Hey guys, I hope you guys doing well. Having some audio issues this morning. Sorry about that. Welcome. My name is Alejandro Zambrano, and today is November 6th, 2019, and it's 37 minutes past 9 a.m. And we're going to take a look at the markets as we usually do. And if you're new to this market update, this is a daily update we do here on investingcube.com, Monday to Friday, where we take a look at the markets. As well, I want to say in here that you should check out the articles for trade ideas and news to know what's moving the markets. On the top, you have the latest news, and then you got the different categories, which you can find here as well. You got forex indices, commodity, and cryptocurrencies, and we focus quite a lot on the first three ones, and also do a few updates for cryptos today, really. And you have the forex section up here with the latest four articles. You got the commodities, you got the indices, and you got the cryptocurrencies, and you even have shares, but we mostly cover shares around quarterly earnings releases. So good. If you want to know more, for example, everything about indices, you just click up here and you'll land on the page, which includes all of our indices news and all our different updates. Okay, let's begin. And we're going to talk about the markets. I'm going to start with the euro. So the euro turned bearish yesterday. We've seen some interesting developments in the dollar in general, where the dollar is actually gaining. Let me show you the dollar index. You understand what I'm talking about? So the dollar index, which is this one, as you can see, has been in an uptrend since pretty much January 2018, and then the market's been going up and up and up. And obviously in October, everybody thought the dollar was invincible. Everybody was like, oh, the dollar is going to continue to rise. And, it did hit a new 2019 high on that day. But we also had on October 2nd, October 1st, we had the bad ISM figures. And then we had more and more bad numbers, and the dollar collapsed. And now we're pretty much on the other end of that range. As you know, I've been bullish for some time. I said maybe you can try to buy here. Myself, I did buy a bit of euros, dollars against the euro, and also some euro yen, and I got stopped out for a small loss, and then the market declined. And I even tried to buy here initially. Actually, I didn't buy directly here, but I traded some other stuff. Also got out for a little small loss. But now when we look at this today, you had a nice little bounce. So it didn't touch the green line here that supported price on September 20th last year and June 2019 of this year. Didn't go all the way down there, but clearly this is a double bottom. And if you flip to a 6 hour, we just traded above the high, which indicates that this is a confirmed double bottom. And on a break to a double bottom, you will usually get the difference between the two lows and the high, which suggests a move to the upside. Obviously, it's not a double bottom that has been in place. There's not a huge difference between this low and this low in time, but it definitely marks potentially the beginning of the end of this downtrend. And right now, it's very difficult to find anyone liking the dollar. And this is exactly what happened up here. Whenever we were up here, everybody was just talking about how the dollar was so good and invincible. So now I think we could probably go down a little bit, and then we'll see what happens. Maybe we'll put fibs on this. Realistically, the market should remain above this August 9 low at 97.02. And might will go down first fib, maybe a little bit lower, but then potentially upwards. Now, if you look at the individual currency pairs like euro dollar, Aussie dollar, dollar yen, and so on and so on, it's not really that clear. It's more clear if you look at more emerging market currencies. Now, in the euro USD, the market is heading upwards right now, and the market did actually trade below this level, so the trend is technically here bearish now. And at least in the short term, we're heading upwards. And I did this analysis already a few hours ago. And I think we can go up to maybe 111.06. But I think from that level all the way up to 111.54, I think people are going to be really keen on selling. But it should be here pretty much. And as long as you trade below the 111.80 level, this turn is bearish. As for GBP versus the USD, the price reached that buy spot yesterday, which was 128.61. So if you bought here, you'd be up with about 20 pip or so. This trend now remains bullish. Being short the Euro USD and being long GBP USD, it's nothing wrong. Effectively, you would be long you would be trading the Euro GBP pair at that point if you trade with the same amounts on both sides. And I think here, again, it remains bullish for now. The Aussie dollar is bullish, but then you have New Zealand dollar, which is bearish, and dollar yen, which is leaning towards the favor of the dollar. So, and dollar Swissy, which is rather neutral. So it's a bit tricky on the majors. But obviously, if we trade below 127.89, then this is also going to be bearish, and then it's quite clear that we should go down. It's just that this is lagging a bit, the euro. So I'm going to leave this the way it is right now, because again, it's 50-50. Not really sure exactly what's going to win. But looking at the dollar index, I will be betting on the dollar from a good spot. Order ratio makes sense. Dollar versus the yen is going down a bit. As you know, stock market is just doing very, very good. It's really the year of stock markets. If you look at the results as well, it looks like it's super impressive to be long stock markets. And yeah, of course, if you from the beginning of the from the year, which is pretty much here, I think the market is up with some 23% or something like that. This is the S&P, by the way. So the market is up with 23%. The difference here, though, is that this market hasn't done nothing since. Well, it has done something, but it's up from January January 2018. The market is, I think, it's up with maybe 10% or something like that. So from that perspective, it's not that great. It's up with 12%. And I can tell you, a lot of people sold here when the market declined, and they never got back in again. So they literally sold at levels from February 2017. I know this for a fact because when I went back over the Christmas period here to my hometown of Gothenburg in Sweden, because I was born in Sweden, my parents live there. People on the street, that know that I'm into finance would ask me questions and things like that, and they were telling me that they were under a lot of pain and they were literally selling here. So it might look great, stock markets, but over a longer period of time, it's not that great. In either case, they're up substantially right now, and the dollar yen might catch up. I mean, the market was on its way up higher on the non-farm payrolls, on the FOMC rate meeting last week. It made perfect sense for me to break out on that day. It did try to break out, but then it failed. If you're looking at this today, the market is moving down a bit, and I do think stock markets can go down a bit as well in profit taking. But I think if we would go down to something like 108.40, then some people might look to buy here with stops just below 107.87. And if we take out 109.31, then this turns bullish. As we're talking about stocks, then this is the S&P. So I've been sharing a few bullish setups. The last one was to buy down here, and the market went up and it's at decent levels. And as I said a few days ago, this is a level where people are probably going to book profits, and I stick by that. This is not the time to buy. The market is overbought per the RSI. I know this turns bullish, so I don't want to sell into this. Rather, just let it go down and see what happens. And some people are probably going to buy at dips. Here's the German DAX. We also talked about buying here, and that went really well. I mean, we're pretty much here. And this is the June 2018 high. Beyond that level, we need to look at maybe something like this, which is the January 28 high from 2018. And that will be the next target. And this is the all-time high. So those are the levels that the market is targeting. As well, we have this head and shoulders pattern. Big head, left, right shoulder, and that triggered already here. And here you can see we're dealing with an 11% potential target. Oh, change. So here's the head and shoulders pattern target. So this definitely continues to be bullish, and in the short term you have this, which is a trend defining level. The market did try to trade higher this morning, as you can see, is failing, and I think we need a pullback here. And this is a decent trend, so let's see if we can trade this for as long as possible, and then we'll see what happens. It's gonna break one point. Don't worry about that. It will do that. Because obviously it's very stretched in the short term, but then eventually we'll have a bigger shakeout, like you see here, because we pretty much stuck like that, and then big decline or goes like that. We might be here really. We might be in this section really, and at one point we'll have that strong decline. And if you just put a trend line on this, you're dealing with maybe the market going down to the pattern breakup point. So maybe 12,427. But right now, that's not on what people are talking about, or that's not what the trend is saying. The trend is saying, keep on buying it, and buy to on the dip. That's where we get a good risk-reward ratio. Crude oil, gold, it's bang in the middle here in this range, and there's not much happening right now. If you happen to be very bearish, you think stock market's gonna tank in the next few days, then buying stocks right now probably a good idea, because we're just above buying gold, because we're just above that level, and if gold really tanks, we'll go up to 1,500, 500, maybe all the way up to the other side of the range. I personally think we're gonna go back at least to the midpoint, which is about 14.99 or something like that in either case. And then there's not a better option, depends really your personality, but I don't like to trade these things when they trade sideways. And then you just have the bullish and the bearish break, which is what you can also trade. As for crude oil, we have some decent momentum here as well, and we got some decent success. We've been talking about buying here for quite some time. We got a setup from here, and then a setup from here, and then a setup from here actually, even though I bailed on that last minute. The levels held though. And if you're looking at this right now, the trend remains bullish about 53.71, and we may have a 50% correction, takes you down to 55.57, or in worst case, I guess 54.60 or something like that. But here, I think people are gonna be buying, and they're gonna lift this. We're in a sweet little channel like that, and down here, I think people are gonna be focusing on buying. Okay, let's see if you guys have any questions, and see if we can answer them. In the chat box, we have Stefan today, and he asked, can we take a look at the Russell 2000? Has a tendency to call tops in equities before S&P in previous cycles. Okay, good. So let's do that. The Russell 2000 is also something I watch every day. Every day I watch the Russell 2000. People sometimes just trade what they feel comfortable with. But if you're a technical analyst and an economist like I am, but primarily a technical analyst, they don't really care about what's going on at the label up here. Is it Russell 2000? Is it the China A50? Or is it the Canadian stock markets, which I traded last year? Doesn't really matter. You just trade the patterns, and obviously try to understand what's moving. And obviously everybody's euphoric right now. Everybody's super happy about the situation, and there are different ways of interpreting the Russell 2000, but it's definitely in a range, and it's also overbought. If you really stretch it, you're dealing with some funny looking inverse head and shoulders. With head, left, and right shoulder. The pattern target though is going to be pretty much the same, and that is on a sustained break to 1,601. This breaks out of this rectangle, and that gives you that 10% move, which wouldn't be unsurprising because you're seeing this in a bunch of different markets, even the Italian stock market. Let me show you the Italian stock market, by the way. Look at this one, and a beautiful breakout from here of a big ascending triangle. And it has more to go apparently, according to the charts. Typically, you'll have that push. It was a long time ago, unfortunately. I mean, this is not that sort of pattern, but it was a long time you could just buy and then we just go straight to target, and then we'll do something like this. It's usually some fake moves or something like that, unfortunately. Not this market. I'm talking about markets in general. So going back to the Russell. Russell is interesting. Yesterday, had a bearish reversal. This is a bearish candle here, and it does indicate that some people took profits on that breakout, and that was a false move. I don't mind this actually. It would be good if it spends a week or so, a few days trading here sideways, because then that's going to build the base for breakout. And if you do want to go with the momentum, if you do think we're going to have a breakout, you might even consider 15 48 as your trend defining level. So the market goes down and then it goes up. But my personal preference is just to wait and see what happens over the next few days. If the market establishes itself on the other side, it'll probably go up a bit, and then it's going to come down and retest that. About the stock markets in general, like the S&P, which we just talked about, like if I just hide everything, we do have that point here, and I do think we're going to revisit that at one point. We're probably going to go all the way down and then go upwards. There's two scenarios really. Let it go down and then up, and the alternative would be the whole thing sort of tumbles and will bounce from one of these trend lines from lower levels, because overall the trend is bullish. Okay, we're gonna wrap things up. Guys, thanks so much for watching. If you're watching this live or not, doesn't really matter. If you did like it, don't forget to hit that like button. We have one like button now. Why is this important? Because when you like it, it sends signals to YouTube that people are interested in this content. And obviously, if more and more people watch and read, then we want to do more of this. So it's really important that you do support. To give you an idea, we made a few changes just a few weeks ago where I decided to do more articles than videos. Why? Because on the articles we would have triple digits. In fact, I did one article on crude oil under those attacks. Do you remember the attacks? They got 5,000 views, 5,600 views in 2 days. So I love doing these morning webinars. I've been doing for many years, and I do love this interaction. But it's really important that if you do like them, that you support them, because otherwise it won't grow. And if it won't grow, then and I'll see the other thing growing. Well, I'm a trend follower, as you know, so I need to make sure that I use my time in the most efficient way. All right, guys. Have a beautiful day and a good trading day. Be careful out there. It is slightly choppy, especially in currency markets. Again, stocks are looking rather interesting. You got some decent momentum as well in crude. And then you have the sleeping giant, which is gold, which right now is literally very boring. Nobody's really watching it. The best thing you can do is put some alerts on this and see what happens. I think as long as we, don't have a breakout in the middle of the night, we should be fine. But I think it's doing like this right now, and then it's just gonna go either much higher or much lower. So it's interesting times, and you definitely want to keep an eye on gold. Stefan, have a great day today, and everybody else, and I'll see you tomorrow, same time here on investingcube.com. Cheers.